Right, so we are outside of the 12 candle window, but day three, this is dollar yen, day three. Big ranges. So we've had 1, 2, 3 levels of rise over the day count. We've got a 15-minute peak formation. We're chopping up the trend line. We could move it out there if you like. So let's do that. We're thinking down the escalator we go. And in terms of measured move, we have the starting point here of the US range, and we could be heading into, let's turn this into a different color, different background so that's clearer. Get that, yeah. So if we have 300% measured move of the range, we're right down to the week's lows, last week's lows, breaking this week's so far. No, sorry, this is last week's lows. Is that right? Let me see. Still trying to get my head around this indicator. We have, so it'll be last week's high. Last week's high. So we've got last month's high. We burst through that, and yeah, so I've just marked up the chart. So there we go. So we've got the prior week's lows down here, the prior week's highs over here. I've marked that as the target. We've got trapped volume that was trying to short in here, including myself. So got stopped out on that. We moved up in the London session on Wednesday, broke out of that, stops and so forth, big move, stops that were triggered. We've had a pullback, we've climbed the stairs into the third level of the 100 pip box, and we've got this 3-line strike topping pattern signifying that this trend is decelerating. Now we're outside of the 12 candle zone, but this just looks too sweet a fruit to pick from the tree. So we've got the FOMC minutes coming up in a couple of hours. So we need to hold on for that, and we'll probably see this move into consolidation, maybe sliding out of the trend line, and we'll be looking for opportunities around here to get short and ride this through maybe Asia, London. I mean, it'll be a swing trade. We may not get the aggressive move, depending on the FOMC. We'll have to see. We'll have to wait and see.